So good evening, everyone. My name is Paul Bourget. I am the project director of Bourstad at CIRANO. This evening conference is about the basics of stock market investing. It is part of a webinar series on the occasion of the 2024 Bourstad Challenge. In this conference, we'll be looking at an overview of how financial markets work. We'll give a look at fundamentals of portfolio management. We'll describe the different types of stocks that exist. We'll talk about exchange-traded funds, which have become very popular in the past few years. We'll see some words about the dividend, the income that stockholders are bound to receive. We'll talk about the recent development in the main financial markets, say a few words on how you can go further in your training about the basics of stock market. And we'll talk about the Bourstad platform, and we'll describe the main aspects of the 2024 Bourstad Challenge. So let's first talk about how capital markets work. On one side, you have capital users, and on the other side, you have capital providers. We can distinguish two different markets on the capital market. First, there is the primary market. It's the market on which the capital users issue their securities that are first bought by the capital providers. And we're talking about a transaction in which capital users receive the proceeds of the issuance of securities, and the initial capital providers will receive the securities. So as capital users, we have the government, public utilities, universities, hospitals, corporations in the financial services industry, and other private corporations. Capital providers are institutional investors, very important in finance, in fact, and we're talking about pension funds, insurance companies, banks and credit unions, investment funds, central banks, government with their sovereign wealth funds, for example. And you also have the individual investors. Approximately individual investors are approximately 30% of the financial market as a whole. And the institutional investors, they will represent something like 70% of the providers. When securities have been initially issued, they are then traded between capital providers on secondary market. And secondary markets are all the stock exchanges that you'll find and other types of system to exchange securities, like electronic markets, such as the NASDAQ, for example. So that's the basic functioning of the capital market. We distinguish the primary market, on which securities are first issued, and then the secondary market, on which owners of issued securities trade amongst themselves. Investment objectives. When we talk about investment objectives, we're talking about what savers and investors are hoping to gain by investing their money. So we're talking about income, receiving regularly dividends or interest. We're talking about capital appreciation, capital preservation, and liquidity. First, let's talk about capital preservation. So capital preservation is the legal, moral, or on a conditional guarantee that the investor will be able to recover all of his capital and receive the expected income. the higher the return sought, the lower the security of the capital. On this chart, we are showing how different asset classes are ranked according to their risk level and their potential return. So if you have your money in a bank account, especially at large Canadian banks, you're not going to earn a very high return. It will be quite weak, in fact, but the risk level is almost non-existent. When you go along the line, invest in, suppose, investment certificate, government bonds, corporate bonds, preferred shares, income properties, common stock, precious metals, options, the higher you get, the higher the potential return, but also the higher the level of risk that you will encounter. Let's mention that here we're not talking about mixing these different asset classes, because when we do so, and we'll talk about it a little further, when we do so, we are diversifying portfolios, and then some additional benefit can result, for example, lower risk and higher return. Investment income is one of the financial benefits of holding investment, or having savings. And this benefit takes the form of regular periodic payments. For example, if you own bonds, meaning you've bought the debt of government or corporations, you will earn interest. Regularly, you will receive interest income by owning this type of securities. If you are a stock owners, if you have invested in stocks of Canadian companies or American companies or European or any type of companies, you will receive dividend. Dividends are normally distributed on a quarterly basis, meaning every 3 months. Companies that distribute dividends will send money to their stockholders. Another type of income would be the rental income. Rental income is what you get if you invest in real estate, for example. So a third type of benefit that we have when we invest in securities, could be bonds, it could be stocks, it's capital appreciation. So capital appreciation is a goal that we can achieve when we get back more capital by selling the assets that we invested when we first buy it. So it's just the fact that the asset that you have invested in just is more appreciated on financial market. It increases in value with time passing. So let's say that capital appreciation is finally realized only when you sell the property, the asset that you own. But it's common practice to try to evaluate annually what appreciation has been achieved by owning the asset considered. The last objectives that you can achieve when you invest your money is liquidity. Liquidity meaning how quickly you can convert the asset into cash without incurring a loss due to the rush to dispose of it. But normally we know that, for example, real estate is not particularly liquid. It takes some time to sell a property. And this period of time can be longer or shorter depending on the amount of transaction on the real estate market. But it's always less liquid, let's say, that owning a stock. But stocks are not all equal on this regard. Let's consider, for example, investing in Metro. It's a quotation that I took today. And when I took the quotation this afternoon, the bid was $70.39, and the ask was $70.45. The ask is what is being asked by owners of the Metro stock to sell it. And the bid is what being offered by those people that want to acquire Metro stock. So being offered $70.39, and the seller is asking $70.45. The difference between these two prices is 6 cents. 6 cents is quite a low percentage compared to $70. And let's look at another example before I come back to the quotation, just to get acquainted a little more with what we have as information. Good food market was this afternoon. The bid was 25.5 cents and the ask was 26 cents. That's a difference of half a cent. Half a cent on 25 cents is 2%. While 6 cents on $70 is a very low percentage, is, let's say, 1/10 of a percentage point. Much lower. Much lower. So let's come back to Metro. For Metro, you see that we have the how the stock performed on the past 5 years. You see that 5 years ago it was $45, now it's $70. Quite an improvement. But for some time, let's say that in 2023, the stocks did not, well, it was quite high, but let's say that the progression was halted during 2023. The Metro stocks is currently paying a dividend of 33.5 cents per quarter, every 3 months. 33.5 cents. Annually, this means a yield of 1.6%. The dividend represents 1.6% as return, as current yield. The earning per share for Metro was $4.35. We have a price earning ratio of 20.46 cents. So if you want to become a shareholder of Metro, you have to pay 20 times the earning per share of the past 12 months. That's what we have here. Okay. Let's go on with some portfolio management strategies. First, we'll talk about portfolio diversification, fundamental analysis, technical analysis, and we'll distinguish between active and passive management, portfolio management strategies. Okay. Portfolio diversification is seeking certain benefits, such as higher returns or lower risk, through a certain mix of securities within the portfolio. So these strategies are based on portfolio diversification, meaning that you will include securities from different industrial or geographical sectors with different degrees of risk. Let's give a look at this chart where, starting with $200,000 on January 1st, 1993, we see what happened during 20 years until January 1st, 2013. On the next chart, we have the same comparison, but between January 1st, 2002 and January 1st, 2022. Okay. If we look at what happened to treasury bills, for example, here you have treasury bill, Canadian T-bills. you started with $200,000 and you end after 20 years with $276,000. Let's round it for $277,000 Canadian dollars. Well, it's not a very big return on such a long period. It's not a very long return, something like maybe 1.5%, not very much. If we look at gold, for example, gold did very poorly for much of the period, but starting in 2003, it did quite well for the second half of the chart, and it ended about approximately in the middle of the pack of these asset classes. If we look at Canadian bonds, very, very stable and quite a neat progressions. If you started with 200,000 Canadian dollars, you are ending with 585, 586 if we round $100,000. So that's quite a lot. That's quite a lot. And if we look at equities now, American equities, that's the lighter shade of blue here. First, it jumped very quickly to almost $800,000 in a few years, in fact. But after that, there were two subsequent very negative periods. First, the implosion of the technical bubble in the early 2000s, and a little later, the great financial crisis, another negative period. Then at the end of the 20-year period, American equities are ending approximately at the middle of the pack. The best performing asset class during that whole period was the Canadian equity. Canadian equities, in fact, they also suffered when there was the implosion of the tech bubble in the early 2000. But after that, they took very much advantage of the boom in natural resources. And even if it fell a lot during the great financial crisis, it quickly rebounded and ended at $802,000 20 years after. If we look at what we have by switching by 10 years later, then the best performing asset class is gold. And if you had invested in T-bills, here we are looking at real return after inflation, meaning taking into account the inflation level. If you had invested in T-bills, in fact, you would end the whole 20-year period with less money, less buying power than what you had at the start of the 20-year period. Canadian bonds did not do so well. In fact, the last years of that period, it decreased, and we ended with $349,000, which is not so good, in fact. Both Canadian and American equities did quite well for that period. And then again, first, I should have looked at a very particular portfolio on the first slide, a composite portfolio, a diversified portfolio, 10% T-bills, 30% Canadian bonds, 30% Canadian equity, 20% US equity, and 10% gold. And there we see that it's the second best performance of the whole asset classes that we've been looking at, and much more stable during the whole 20-year period. when we look at what happened by shifting the period by 10 years, it's still quite interesting as a return because you end with $531,000. Not so bad. But here it's even more stable, meaning that the level of risk that you incurred was quite low, considering the return that you got. Okay, so now let's talk about fundamental analysis. Fundamental analysis is the technique by which you scrutinize the financial situation of companies or projects that you are looking at in order to be able to make a reasonably reliable forecast of their short and medium-term earning prospect. What the company will be able to sell and what type of profit will they be able to make at the end of every financial period that you will consider. Basic information for this exercise is found in the company's annual financial report that you can find if you go on the website and look at investor relations. But many financial sites such as Yahoo, Quote Media, or Morningstar will provide that type of information as well. The scope of fundamental analysis is not limited to companies, but you can also apply it to the economy as a whole or to industrial sectors, provided that you have access to the data, the required data. Technical analysis is limited to looking at the prices and the volumes, so we consider it as being the analysis of the investor behavior. Advocates of this approach frequently compare the movement of investment prices to the movement of waves on a rough sea. If you give a look at this chart here, it's a bit like we could have the same impression by looking at a rough sea in a way, no? So you see the height of the wave and the true of the wave. So people that are applying this technique are trying to buy at the lows and sell when it's quite high, and they try to make profit based on this evaluation. Okay, active portfolio management versus passive portfolio management. When you are adopting an active portfolio management strategy, you're trying certainly to outperform the market indices. The reason for being so is because with the emerging of the exchange traded fund based following market indexes, it's quite easy now to achieve the market return at a very low management fee. So when you are doing active portfolio management, you are trying to beat the market index. Passive portfolio management is when you are maybe relying on exchange traded funds, funds that are following market indices, and with a very low management fees, because managing such a fund is not very complex. In fact, might probably be done by AI, artificial intelligence, or not someone holding a PhD in finance or economics. So you don't have to pay a lot of money to have that type of fund managed and followed carefully followed, in fact. But the same strategy could be achieved by building your own portfolio and including a great number of high quality stocks, for example. You could also achieve the same strategy by yourself. Okay, let's look at a few concepts in the responsible investment and sustainable development. So there are a few strategies about responsible investment. First, you could be screening. You could be saying that you will avoid companies that sell tobacco or weapons or maybe fossil fuels companies. You could also opt for active shareholding, meaning that you're ready to buy stocks in companies with not so perfect ESG performance, but then you will be an active shareholder going at the General Assembly of Shareholders and presenting a shareholder proposal aiming at improving the ESG performance of these companies. Those ESG factors are environmental risk, social risk, and corporate governance risk. These are factors that will affect how responsible a corporation is. And in the past few years, we have seen some industrial strategies about sustainable development. For example, many companies that are working in the clean tech industries, renewable energy, for example, transportation, not relying on fossil fuels, and let's say site restorations. So those companies, they form clusters and they will help each others and have meetings or boards or committees about improving their economic situation. You'll find such clusters in cities like Toronto, Montreal, and Vancouver, for example. And more recently, we are talking a lot about circular economy. So there are a few strategies about this, and you may find these strategies in the responsible investment guide of the Bourstad challenge that you can find on the Bourstad platform. Degrees of involvement you wish to have in the management of your financial assets. So 4 levels of involvement. First, there is the private management, meaning that you rely on an expert that will take care of investing your money. It is evaluated that approximately 3.2% of households are relying on private management, but what they have to manage is 60% of all financial assets under management in Canada. You can delegate management to a shared portfolio manager, meaning that that's what you have when you invest in actively managed investment funds, going with companies like Investor Group, McKinsey, TriMark, for example. It's also what you would get if you have an investment advisor at a full service broker, an advisor with a license to manage portfolio. In fact, these type of advisors can build portfolios and sell units of these portfolios to their clients. So in a way, they have carte blanche to include any type of securities they want in this portfolio, and they invite their clients to take units in such portfolios. Supervised management would mean having an account with a full service broker, which has not a license about portfolio management, or maybe if you do not take part to this portfolio managed by your advisor, then your advisor will just give you some advice about what stocks in which you could invest, and he will look with you with your investor profile and try to suggest you securities that fit your profile. And finally, you have autonomous management, meaning that you just open an account on a discount broker, on an online broker. And it's also what you get when you take some units, some parts in what robot advisors have to offer. Okay, typical fees and entry threshold for all these four types of involvement in the management of your financial assets. Private management, we talk about $500,000 Canadian dollars, and fees would represent less than 1% of your total amount. If you go for shared management, $25,000 would be enough, and the fees would represent between 2 and 3% of your investment. If you go for supervised management, more money is required. Let's say $50,000, and the fees would be something between 2 and 3% again. And if we're talking about autonomous management, $10,000 is enough. If your portfolio is worth $100,000, the fee would be less than half a percentage point. But if you have the lower amount, let's say $10,000, that could reach 2% annually. Okay, types of actions, of stocks, I mean, here. Okay, so legal aspects, if you just have a few basic economic courses or accounting course, you may have been thought that there are two types of shares, common shares and preferred shares. But let's say that lawyers can do very strange things with these two types of shares. In fact, a common shares could be devoid of voting rights, and a preferred shares could, in fact, have some conditional voting rights. But the basic difference remains. Preferred shares will be advantage if there is eventually a liquidation of the company. They will be paid before holders of common shares, and normally dividends are distributed to preferred shares owners before they are distributed to common shares holders. So preferred shares owners will have priority about distribution of dividends as well. In fact, less than 10% of the whole market capitalization on the stock exchange are made of preferred shares. Preferred shares are most likely compared to bonds. In fact, preferred shares is a way for those seeking a high level of security, of safety, to receive dividends instead of interest, because on the tax, when we look at the tax aspects of interest and dividends, there is some benefits to receiving dividends relative to interest. So most of all, what is traded on the stock exchanges are common shares. Okay. Okay, let's give a classification based on the benefits. So blue chip stocks, income stocks, defensive, cyclical, fast growing, and speculative. What we call blue chip stocks are shares of large companies with assets generally in excess of 20 billions. So these companies see a constant progression of sales and profits. They have a long history of dividend payments, steady growth, no interruptions in their dividend payments. And you will find these companies in mature industries. They have a strong position in their mature industries. Examples are Disney, Royal Bank, McDonald's, Coke, CN, Loblaw. when you see that there is a link on CN, for example, it means that if you have eventually the PDF version of the presentation, which will be made available exactly where you will find the recording of the webinar, you will be able to follow the links and see why we can consider CN a blue chips. Income stocks, I have to mention that these categories are not mutually exclusive. An income stock can also be a blue chips. Income stocks are common stocks that are sought not for their capital gains potential, but for the high dividend yield. The effective dividend rate on the market value of an income stock changes constantly in direct relation to the general level of interest rates. So examples of such companies are Bell Canada, BCA, TELUS, Canadian Utilities, National Bank, Procter & Gamble, Johnson & Johnson. Obviously, these two American giants are also blue chips. TransCanada, AT&T, Fortis in Canada, Fortis, which is involved in electricity in Newfoundland, for example. Defensive and counter-cyclical stocks. So defensive stocks are stocks of companies whose profitability is less or not very sensitive to the general economic situation. So less sensitive to the general economic situation and the general trend of the stock market as a whole. Here you'll find staples, consumer staples corporation like Metro, McDonald's, Walmart, Restaurant Brand International, which is Tim Horton, the owner of Tim Horton franchise in Canada. Cyclical stocks. These stocks are stocks of companies highly sensitive to the prevailing economic climate, much larger variations in sales and profit than the average company when there is variation in the economic cycle. So here you will see companies like BRP, which is the manufacturers of Skidoos, for example, Rio Tinto, the giant mining corporation, Cameco, American Express, an American bank, but very much involved in the discretionary product, consumer discretionary products, tourism, for example, Magna, manufacturers of parts for the auto industry, Canadian Forests. These are large corporations that see their sales and earnings fluctuate greatly with the economic cycle. Fast-growing stocks, and much easier to identify stocks that have grown very much in the past and then to forecast what will happen in the future. So such companies are Intact Insurance, Waste Connections, Constellation Software, WSP Global, which is an engineer firm based in Quebec, in Quebec City, in fact. Alimentation Couche-Tard. If you follow this link, you'll see how to use the value line service on BANQ numeric to locate companies that are forecast to grow significantly in the near future. So finally, speculative stocks. Companies starting their activities in a very risky sector, or companies whose products have not yet passed the market test, companies that are already operating for several years but are nevertheless going through a period of financial difficulties, and companies that are significantly overvalued by several value or risk measurement ratios. So Lion, Copper and Gold, Oxley, Cannabis Group. Cannabis, the valuation of cannabis company was very, very high for many months a few years back, but now Oxley Cannabis is a penny stock. GameStop is the corporation that increased a lot 3 years ago, when some movement on social media encourage non-so knowledgeable investor to buy the stock. And since there was a very large short proportion on the stock, quickly those short on the stock were forced to buy, and it created an additional demand, and GameStop went to a very, very high price. It eventually fell quickly after that. Okay, indirect ways to trade shares. So you can buy bonds or convertible preferred shares with the possibility eventually to convert these securities in common stocks. You can, on the primary market, buy bonds and preferred shares with warrants. A warrant is a type, a bit like an options, that specify a price by which you can buy the stocks, and there is also a deadline, a limit time to do so. And normally when you obtain the warrant at issuance of the bonds or the preferred shares, maybe the warrant give you the opportunity to buy a $5 stocks at $10. It's not very worth, it's a bit almost worthless when you get it, but eventually, if it's it can be used for 5 years, for example, maybe in 5 years, the stocks will be worth more than $10, and then the warrant will be a very interesting product to own. Investment funds, so you can go for actively managed investment fund or passively managed or exchange traded funds. Finally, if you want to take more risk than owning the stocks themselves directly, you can buy options, warrants, or rights on the stock exchange. So let's talk about those exchange traded funds. They now have been offered for 25 years, and they are put into circulation by specialized firms, and most banks and even companies offering traditional mutual funds have entered the ETF markets. So a Canadian investor can buy funds based on major Canadian, US, and other international stock market indices. That includes sectoral indices. You can buy stocks, let's say, on the healthcare sector, on the consumer staples sector, on the consumer discretionary sector, etc. You will also find funds on precious metals and commodities. You can find bond funds for different type of issuers, government, corporations, highly rated corporate issuers, or high yield, not so well rated corporate issuers as well. You can find international funds with or without currency protection, hedge for the fluctuation of the Canadian dollars. You will also find ETF with some active or quasi-active management strategy. You will find balanced funds. A balanced fund, in fact, is composed of several index ETF, maybe a stock ETF, a bond ETF, and you will also find leverage funds, meaning a fund that will provide you with 2 or 3 times the return of the index on which the fund is based. And you can also buy inverse fund, meaning that if that stock index starts to fall, you'll be making money 2 or 3 times the amount of the fall, in fact. Okay, ETF will track their benchmark closely. Reason for that is that on each trading day, unit holders may exchange the prescribed number of units or a multiple of that prescribed number for a basket of securities and cash. So if eventually some discrepancies appear between the real value of the ETF and its market value, some specialists will enter the market and will start to accumulate the fund. aiming to present themselves to the manager with the prescribed number of units. So they will realize what we call an arbitrage profit by doing so. Okay, some listing of ETF, you'll have to follow these links. In Canada, the Morningstar provides a very fine screener of ETF. Wikipedia also provides some lists for Canada and for the US. Dividends. Dividends is the current income that a shareholder can receive in relation to his or her investment in a company, whose securities he or she owns. Empirical studies have shown that dividends account for approximately 35% of total return. So a moment ago, we looked at the dividend for Metro and we see that it was 1.6%. And maybe it does not appear to be very much, but on average, people invested in the stock market realize that approximately a third of what they will earn globally is made of dividend. Okay, dividend policy. You'll have the fixed dividend policies. That's something that Metro is following, for example. Currently, Metro is signaling to the financial market that its dividend is 33.5 cents every quarter. And most companies will follow, great companies, I mean, large companies, the fixed dividend policy. If something special happens during the year, so let's say that Metro is selling his holdings in Alimentation Couche-Tard, which they did a few years ago, in fact. They could issue a special dividend. So when a special dividend is issued, there's no expectation that the fixed dividend will change eventually. So you can, after having issued a special dividend, later be back to your fixed dividend policy, and no problem doing so. There is also what we call the rate of profit distribution as dividend. And this is a policy as well. And we can look at certain companies and observe that they tend, on average, to try to distribute that certain percentage, let's say 30%, 40%, even 50%, depending on the industrial sector, as dividend, of their profit as dividend. And some companies are also offering dividend reinvestment program, meaning that stockholders can choose to receive their dividend as new shares in the company. Okay, dividend payment. So for dividend, there is the registration date, there is the ex-dividend date. When that dividend was issued in 2010, the settlement time for a purchase of stocks was 3 days, meaning that to be in the list of eligible stockholders on April the 1st, you would have to buy the stocks by March 29, meaning if you buy by March 29, there will be ex-dividend on March 30, there'll be March 31st, and eventually April the 1st. And that's the 3 days. Okay. And payment date occurs on May the 1st. In September 2017, the settlement time was reduced from 3 to 2 business days, meaning that it's a little shorter now to be in the list of eligible shareholders. Okay, dividend champions in Canada. If you follow the link, you'll be able to register yourself to receive this monthly chart, this monthly table. And here I have the 21st position on the chart. You see that example, for example, Metro. Dividend is not very high, but Metro, over the past 20 years, has increased its dividend by 14% annually, on average, annually. So it's quite a remarkable rate of increase. But as we speak, Metro is worth much more than it was 20 years ago. So it's still a low percentage of the stock price right now. So here you have a list of some companies that are considered the dividend champions in Canada. Okay, how have some markets performed over the past 5 years? You see the rate of return, the yield of the 10-year bonds in the United States, US government 10-year bonds. In the middle of 2020, it was a little over 0.5%. Over 3 years, 4 years in fact, it reached almost 5%. It's a very, very huge increase in such a short period of time. And keep in mind that when the yields are increasing, people holding those bonds see the value of their bonds decrease. So it is inversely proportional, in fact. A rate increase, the price of bonds decrease. But could be mentioned that before 2020, for a very long period, something like maybe 40 years, bond yields have been decreasing all the period, mostly. So holding bonds in that 40-year period was quite interesting, in fact, because the decrease in the yields would mean that the price of bonds was increasing in your portfolio. Okay. For Canada, it's approximately the same evolution. By the mid-2020, rates yield was at 0.5%, and last year it went over 4%, but has been decreasing in the later part of 2023, has been decreasing. The TSX, the stocks on the TSX, last year, in fact, the increase was 8.1%, but we can see that for the past 2 years, there seems to be a trading range for the Canadian stock market, in fact. After the pandemics, it quickly increased from 12,000 to 22,000. It was quite a huge increase in such a short period of time. Okay, the New York market last year increased by 24%, and it recovered mostly what was lost in 2022, as you can see. On the NASDAQ, the tech stocks, last year, the increase was 54%, quite remarkable, more than compensate what was lost in 2022. In 2022, the decrease was 33% of the value. And last year, it more than recovered by closing at 17,000, in fact. Okay, the US dollars and Canadian dollars. Last year, we ended the year with 3 cents less in order to buy a US dollar. In fact, the Canadian dollar increased in value last year, because if you have to pay less to buy a US dollar, it means that the Canadian dollar is worth more. Gold price trends. By 2018, gold was valued $1,200. And in 2023, it sold over $2,000. So quite a great increase in the price of gold. But you can see that since the pandemic, there's a bit of a trading range for gold. A wide trading range, but still a trading range for gold. Last year, the increase was 13.1%. And US crude oil, West Texas Intermediate, WTI, last year, the decrease was 10.7%. After the pandemic, the price rose from $20 to over $120. That's very, very rapid increase. The launch of the war in Ukraine marked the beginning of the decrease in the value of West Texas Intermediate, because last year, United States, they start to decrease their petroleum reserves, their strategic petroleum reserve, and it decreased quite a lot. And we also observed that there was an increase in the export of Canadian oil to the United States. So both these phenomenon meant that the price of oil decreased last year. Okay, if you want to go further, the AMF has a very interesting tool, the Quebec Directory of Financial Education Tools. Many publications, Globe and Mail, Financial Post, publication that you can find on the Bibliothèque et Archives nationales du Québec if you create your account on this service. So Financial Times, Financial Post, Journal des Affaires. You can even look at the Wall Street Journal on the press reader service, meaning that you're literally turning the page of the real journal, in fact. And you also have the Value Land Financial Information Service, a very highly rated financial information service for which you have access using BANQ. And we'll look at Bourstad in the next few slides. Okay, so what are the characteristics of a Bourstad simulation? In a Bourstad simulation, the participant acts as a portfolio manager for someone who has entrusted the participant with 200,000 Canadian dollars. We have real-time transaction processing for 7 and 1 tradable securities, and we receive stock market quote with a 15-minute delay, but we process the transaction at the price when it is received. So every minute we fetch market quotations. So 400 times a day, we fetch market price quotations for all these securities, these tradable securities. And if you issue a buy order at market price or a sell order at market price, it will on average be processed with a price 30 seconds off the moment you issue the trade. So the price used is 30 seconds off later, after the moment you issue the trade on average. And every morning we distribute dividends for stocks that are ex-dividend on this very day. And every evening we process transaction for the 36 actively managed pool fund, mutual funds, because the quotations for these products becomes only available once a day during the evening. Okay, the portfolio is made of, it's a little more now than that. In fact, it's 633 securities, and that's 601. And we have 36 actively managed investment funds, and it's still 36. Shares of Canadian company, it's now 285. Shares of US company, it's 140. Shares of Asian companies, still 26. Shares of companies from Australia, South America, and Africa, 17. Shares of European companies, 41. Equity pool funds, ETF, in fact, of equity, ETF equity, 63. Bonds equity, bonds ETF. Now we have 49 bonds ETF. Index mutual funds for alternative strategies, it's now 7 and not 17, because some 10 were shifted in the Bourstad Plus portfolio, and 6 currencies. I will just make the required modification to this slide before issuing the final version on the notification system of the Bourstad platform. Okay, the Bourstad Plus portfolio, that's 110 securities are added to this portfolio. So that is 72 options traded on the Montreal Exchange, and 38, and not 28, 38 leverage index funds traded in the US and in Canada. So I will make the required corrections on these slides, these two past slides. So when you issue a trade, let's say that would be a buy order at market price, you have to specify the security, indicate the quantity. You will also have to indicate how the trade will affect your portfolio. There are 7 asset classes: liquidity, bonds, public utility stocks, financial services stocks, consumer product stocks, industrial product stocks, and natural resources stocks. So when you made a buy or sell, you have to indicate how your portfolio will be affected by the trade. But I mentioned right now that you will find in the documentation the exact weights of all securities among these 7 asset classes. Okay, portfolio management, you have 3 features: investor profile, portfolio management, and learning objective and achievements. The 4th one is not shown here, which is only a blank page on which you can add any comment, observation that you want to include in your report, in your file. And this information is made available to your teachers eventually, or to the challenge jury. Okay, investor profile, it's specified what is targeted as income annually, as capital appreciation. Is your investor risk averse, or is he tolerant to risk? How much experience does he or she have in investment? What level of knowledge about investment does he or she have? What is the value of total assets, total debt, total annual income? Are we talking about a prudent, middle, or speculator investor, in between investor? Your portfolio management strategy, will you be active, aiming to have a return in excess of the stock market return, or will you be passive, only aiming to get the market return, which is quite an achievement? Don't have any doubt about it. Will you be using top-down analysis? Top-down analysis, you rely mostly on what is readily available as public information about the economy, the company, the industries, etc. Bottom-up means that you'll be ready to maybe visit the installations of some companies, maybe look very carefully at those thick annual reports and the very fine notes where maybe some accountant has been trying to make some important information not so easily found, in fact. And how will you allocate your $200,000 in the various asset classes: liquidity, bonds, utilities, financial services, consumer products, industrial products, and natural resources? So, and third, you specify what you're trying to achieve in participating to the Bourstad simulation. Portfolio management is automatically evaluated constantly in the formative evaluation, 5 evaluation measures. You'll find information about it on your dashboard, the participant dashboard, but with more detail in your detailed report. At the end of the simulations, we compute summative evaluation, and then there are 14 evaluation measures. And a participant can look at his evaluation on these 14 measures in his or her detailed report. Okay, what type of support do you have on the platform? Very extensive documentation, information on securities, how it works, the rules of the contest. And by the way, the section about the operations describe how the Bourstad platform works. So even if you're not taking part in the Bourstad challenge, give a look to this section of the rules, because basically it describes how the platform works. Educational content, knowledge tests, information provided by your IMF, by CFA Montreal, Finicolab Games. Honor rolls, that's where every year, we publish the list of the winners of the Bourstad Challenge and a file to the Bourstad Challenge contestant. Occasionally, we are sending emails to the participants, but since some emails are not reaching the participants, we will always post these emails in this file, so you'll be able to find it there. Okay, if you're starting with Bourstad, give a look at the beginner's kit. Other type of support, you have email and phone support, Facebook page called Bourstad, on which every Sunday we are publishing a market commentary, weekly market commentary. There is a mentor to the Bourstad Challenge, applying a passive portfolio management strategy. And every week we are making available the detailed report of the mentor. And 5 webinars, this one, the basics of investing, and the next one will be on portfolio management, another one on responsible investment, and challenge and opportunities of supply chain management. In fact, this year, that will be transition vers un secteur bioalimentaire durable et innovant. It will be held in French. And the last webinar is about the careers in the financial sectors. This last one will also be held in French. Okay, the deadlines of the Bourstad Challenge will start next Monday, February the 12th, will end on Friday, April the 12th. In between, on February 25, you have to complete the definition of the investor. You have to create your initial portfolio management strategy and specify your learning objectives. Between March 11 and March 24, it'll be the period when you'll have the opportunity to take the qualification test for the responsible investment component. It will also be the deadline, March 24, to bring some adjustment to your portfolio management strategy. You can do it once and in one session on the computer. And April 15, it will be the beginning of the call for testimonials by Autorité des Marchés Financiers, where you are invited to describe your learnings by participating to the 2024 Bourstad Challenge. You will be able to do this submitting between April 15 and April 26, which is Friday, April 26 by the end of the day. Responsible investment in the 2024 Bourstad Challenge. So you'll find the guide for responsible investing in the documentations, educational content. There is also some aspect of responsible investment in portfolio management, because you have to indicate how aware is your investor about responsible investment. And you as a manager, will you take into account extra financial risk, environmental, societal, and governance risk? As we just mentioned, there'll be an online qualification questionnaire between March 11 and March 24. This questionnaire is made of 40 questions, including 2 essay questions. The essay questions are mentioned, the exact wording of this question is mentioned in the rules of the contest. So you'll be able to prepare by advance your answer to these questions. This questionnaire will be automatically evaluated, and you have a Grand Prix for high school and college level and general public categories. So a first grand prize of $1,000, second grand prize of $500, but the second grand prize is not offered in the general public version. Okay, secondary level, it's quite similar between secondary, college level, and general public. So responsible investment, that's first grand prize $1,000, second grand prize $500. Performance, financial performance, Bourstad portfolio, first grand prize $1,000, second grand prize $500. Portfolio management, first grand prize $1,000, second grand prize $500. And overall performance, which is a mix of all 3 components, that will be $1,000. There are no second grand prize for this. Two of our sponsors are interested in encouraging female contestants to participate in the challenge first, and eventually to consider maybe careers in the financial service industry. So, Autorité des marchés financiers will be awarding Best Portfolio Management by a female secondary student with the prize of $500, and CFA Montreal will be awarding the Best Overall Performance by a female high school student with a $1,000 prize. In every schools with high schools with 20 participants or more, we will award a mention of excellence for Best Portfolio Management with $200 as prize money, and Best Financial Performance with also $200 as prize money. At the college level, it's mostly the same, with the exception that there students can choose between the Bourstad portfolio and the Bourstad Plus portfolio. So you have Grand Prix for both portfolios, $1,000 for the first grand prize and $500 for the second grand prize. Still, there you'll find the prize for female contestants, and there again, we will award mention of excellence where there are 20 participants or more for the type of mentions concerned. In the general public, the difference is that there are no second grand prize, so always a first grand prize with $1,000 for each of these grand prizes. And there are prizes for university students. So the best overall performance by a university student will come with a $1,000 prize. This prize is being awarded by CFA Montreal. And we will also award at CIRANO prizes for best financial performance by university students for both the Bourstad portfolio and the Bourstad Plus portfolio. And IMF is also awarding a grand prize for a female contestant in the general public category with a $500 as prize money. And for every university with 20 participants or more, the mention of excellence will also be awarded. Okay, upcoming webinars. So on February 15th, that's next week, Thursday next week, I believe, we'll have the portfolio management in a Bourstad simulation. The guest experts will be Mrs. Erika Thott, CFA, which is Director of Institutional and Advisory at Eastern Canada at BMO Global Asset Management. And on March 7th, we will have the Sustainable Investment in the Bourstad Challenge with Mr. Thomas Estines, which is co-president of the Responsible Investment Group. Then again, the webinar will be between 7 and 8 p.m. You will also find on the presentation the French webinars that I will not present now. And it's time to conclude. So let's say that the world of finance is an infrastructure that underpins human activities. If you want to invest your money, first determine your investment objectives. What is your target? What do you want as capital safety, as liquidity? Take a moment to reflect on the appropriate strategies based on your goals, knowledge, skills. Determine how much you want to be involved in the management of your financial assets. You have to be ready to develop your financial literacy constantly, because the financial service industry is always evolving. Constantly new products are being introduced. You have many possibilities. Caution is recommended, especially if you are starting out with investing. But doing so, being skilled at investing your money, you will quickly find that maybe you can more easily achieve your goals, and you can maybe have bigger goals. So I hope that it was instructive for everyone attending this webinar. And if there are any questions or discussions, you can ask your question now using the chat, or maybe I can allow you to use the microphone if you want. Any questions from the participants? So while questions are coming, I will thank Mrs. Emilie Grange, events coordinator at CIRANO. Thanks also to all those who attended this presentation and those who will eventually see the recording of the presentation.